everybody. Welcome to the Bill Young Grow Wealthy podcast. My name is Walida Cherie. Today we have a special guest with us, and his name is Joseph, and he's been on the podcast with us before. And typically he's talked to us about wholesaling. But today he's going to talk to us about the benefits of multifamily investing. Without further ado, let's get into this. So, Joseph, tell us why you decided to make the switch from wholesaling to multifamily because you've been on the podcast before. So, what made you want to make that switch?
Personally, I saw what I like to say is the writing on the wall. It was a lot of changes coming, and with these new gurus and stuff coming out and pitching everybody on, hey, everybody, come to wholesaling. It made it extremely saturated in big markets such as Dallas, such as, like the DFW area as a whole, Houston, and other similar markets. So, I went into multifamily just because it's a higher barrier of entry. And I mean, there's ways to get in, which we'll go over some of those today as far as the benefits go. But yeah, it's a higher barrier of entry, so less competition.
So, this would be equivalent to advancing your career, correct?
Yes, exactly. Multifamily is where everybody wants to be, bottom line.
Gotcha. So, go ahead and tell us the first reason why we should invest in multifamily.
The first benefit of multifamily is group purchasing, and it's just because it's a very capital intensive real estate asset. So when people see $10 million or $30 million on the price tag for a piece of real estate, they automatically think, "Hey, I can't do that." But group purchasing allows investors to combine capital with other investors in order to purchase a larger and potentially more profitable real estate investment.
Okay, so how does this actually work? If there are 1,000 people with $1,000, is this the way group purchasing work, or is there a minimum cap in order for this to be a successful type of investment?
Yes, so the minimum investment is 100,000. But it all depends on if you're investing within a fund or if you're investing with an individual syndicator. If you invest within a fund, then it's better to do a preferred minimum, which is 250,000, just because it's more beneficial for you. And then also with syndicators, you can do as low as a $25,000 investment.
Are there benefits to investing 250,000 versus 50,000, or are the benefits about the same?
Because the more money you invest, the more profitable your investment will be for you individually. So let's say there's a 10% cash on cash return on a building. If you put in 100,000 versus putting in $1 million, well, the person who put in $1 million is going to profit more. The person who put in 100,000, they're probably going to make 10,000 for the year cash on cash return. But the person who put in $1 million, they're going to make 100,000 for the year. So it's higher economies of scale that way.
Besides having the right amount of money, are there any other requirements to be able to invest in this type of opportunity?
Typically you have to be either accredited or a sophisticated investor in order to invest in multifamily because the SEC wants to know that you're not putting your last 100,000 into this here property and then going homeless.
You said a fund and a syndicator. Do you mind going into more detail to tell us what is the difference between investing in multifamily with a fund versus a syndicator?
If you're investing with a syndicator, it's not bad to invest with a syndicator. It actually allows you to invest directly into a property. So with syndicators, you're allocating all of the funds that you invest are going straight into one individual property. Well, let's just go over the benefit. The benefit of that is when you invest solely into that one property. So let's say you put 100,000 into one property. Now, when that property goes up, you actually gain a lot more. On the flip side, is if that property was to underperform, then you lose a lot more. So it's a lot riskier to invest with a syndicator. If you invest within the fund, your risk is mitigated. So by finding a fund manager and investing with them, you get invested in more doors as well. So if you're one of those numbers people that like the number of doors and want to brag to your friends how you own 1,000 units, your best bet is to invest with a fund manager.
So basically, what you're saying is it's kind of like a person investing directly with a stock versus a person investing in, say, an index. The fund will be equivalent to an index fund because it goes across several different apartment complexes. So if one underperforms, you can still be profitable because you still have other complexes or apartments that you are still generating income from. Whereas if you invest with a syndicator, if it's a good deal, then great, you have profit. However, you're saying that if the deal doesn't fall through, then you basically lose all your money because that's the only investment that you have your money parked in. Is that correct?
Exactly. It's a lot more riskier to invest directly with a syndicator versus investing with a fund manager.
So, do you mind telling us what is the next benefit of investing in multifamily?
Operational efficiency. So, by investing in multifamily, it provides economies of scale, which will be the property is professionally managed. There's on site managers, there's a leasing staff, there's maintenance. And then also, when you invest with multifamily in the fund model or with a syndicator, you're not having to manage the property yourself. So you have what's called a general partner, and they oversee the property manager. So they are the asset manager. And they sit on calls, weekly calls with them, and just make sure everything is going fine. And they should send you monthly reports as well. I can't speak on all syndicators, but I do know with my group, we send monthly reports. Now, another benefit of operational efficiency is that the more units on an apartment building, the more value you receive from the property manager.
What is the third benefit of investing in multifamily?
The third benefit is the ability to force appreciation, which earlier, like I was stating, when I said I moved into multifamily over wholesaling, is in wholesaling, when you get a property, you have to deal with the after repair value. So if such and such on the side of across the street sold their property for 250 and it's similar square footage as yours, but you want to sell yours for 300, you can't. You gotta sell yours for 250. With apartment buildings with multifamily is completely different because each apartment building is a business in and of itself. So when you buy that apartment building or business per se, then you can instantly add value. So just an example, just to give you an example of that, if you go in and you reduce a water bill by $25,000 per year at a 5% cap rate, then the property value increases $500,000. So just like that, $500,000 has been added to your net worth.
So, what are some other things that will allow a multifamily investment to have forced appreciation?
Raising rents. Now, this is an unpopular thing, but raising rents also increases your profitability. So, for example, if you increase the rent $25 per month per unit on a 100 unit property, so let's say that's $2,500 a month, $30,000 a year at a 5% cap rate, then the property value increases $600,000.
So, what is another advantage of multifamily investing?
I would say the return of capital if you're a limited partner. All that means is once you invest, let's say 100,000 into a property, within 2 to 3 years, you can receive 100% of your original investment capital back while still owning the asset and collecting cash flow from that asset.
Okay. So, do you mind giving us a little bit more details about what that looks like?
This process happens every 2 to 3 years. So it can happen between a supplemental loan or refinance. So every 2 to 3 years, you can either refinance or to get supplemental loan, which takes some money out, anywhere between 25 to 100% of the investment capital, which is non-taxable, and you can hand that straight back to the limited partners.
All right. So, is there any more benefits we should know about?
Well, yeah. So another benefit would be passive income, which everyone talks about passive income. Everybody wants it. Not many people know all the ways to get it. So really, so all income that comes from multifamily is passive rental income. Well, I can't say all, but the cash flow, the monthly cash flow, is passive rental income.
So, what could you expect for multifamily in terms of passive income?
Like I said, it really depends on how much you invest. If you invest a million and with a 10% annual cash on cash return, that's 100K for that year.
Okay. And so every year the profits go up, or is it going to be consistent 100,000 per year? Because passive income is important, but like we're seeing today, inflation is really killing a lot of people's paychecks. So you have gas and food and the rising cost of housing. If I earn 100,000 today, that's going to look very different for me in 10 years. So how does this work in terms of multifamily? Is it consistently going to be 100,000 or whatever you invest? Cuz like you said, the more you invest, the better your returns. How exactly does this play out in the multifamily world?
So I would say by reducing expenses, increasing the rents, and additional income, then the cash flow will increase each year.
Okay. So we talked about group purchasing, operational efficiency. We talked about forced depreciation, return of capital, passive income. Are there any tax advantages to investing in multifamily?
Yes, so some tax advantages is just to name a few. So investors they can substantially reduce their income tax liability via cost segregation, which speeds up the rate at which investors can claim tax deductions. So you can claim anywhere between 75 to 100% in tax deductions year one just by investing in multifamily.
Is that it, or are there other benefits to investing in terms of the tax advantages?
The monthly income is going to be taxed as passive rental income. There's annual depreciation deductions, and also the sale proceeds are considered long term capital gains if they're held longer than 365 days, which they will be. Also, loan proceed distributions, they're not taxable at the time received, even after the investors have already received back 100% of their investment capital.
Nice. Okay. So it seems like it's actually very beneficial tax wise because, as you all know, who are listeners, if you've been here for quite some time, you understand that taxes is one of the biggest bills we all can carry. So if you can take this opportunity and invest in multifamily, then it does allow you to actually keep more money because of the fact you have these great tax advantages just by investing in multifamily. So, what other benefits are there to investing in multifamily?
Above market returns. So all that means is that you're gonna get better returns in multifamily than what you would receive in the stock market.
Do you mind expounding on that a little bit more?
So just for some conservative numbers, cash flow can range from 5 to 7% in year one and then increase to as high as 15 to 20% after year five of investing in multifamily. Also, capital gains on the sale can represent returns ranging from 20% to over 100%, depending on how long the property is held. So, for example, we've raised capital for a property that has a low side return on investment after 6 years as a 64%, and then on the high side, 167%. So, it's very few investments that you can invest in that'll get you a return of 167%. Just to go over some other ways, like another way to be invested is you don't really have to just have, let's say you have a high paying job, you don't have to use the cash that you would keep in your account to invest. If you have a self-directed IRA, that can you can use that to invest. So let's say you have a 401k or a Roth IRA, something of that nature, and you have 250,000, then you can actually invest that full 250,000 into, I would recommend, into a fund. That way it can manage that for you and you'll get above market returns and have a much better retirement. And also the benefit of doing that is the difference between the typical 401k or Roth IRA, which are normally hinged to some form of the stock market or index. Dealing with multifamily, it's a hedge against inflation. So inflation doesn't hurt people who own apartment buildings as much as it hurts people who are in the stock market. If you invest in this here actually with inflation, you tend to gain more profit in the multifamily space when inflation is happening.
Yeah, because it seems like no matter if it's a bear market or a bull market, the multifamily investments are better off either way.
That's true. If you buy for cash flow, if you buy for cash flow, then you'll be good. Simply because cash flow is going to take care of you through any form of the market. I've never seen that rents just decrease because of a recession.
But they'll typically stay the same if they have to, but it never just actually lose value, is what you're saying. Is that correct?
Yes.
Okay, cool. All right. So, is there any other things that we need to know about in terms of investing in multifamily, or is this about the end of our road here?
This is everything. These are all the benefits here.
So let me just ask for all of you out there listening, is multifamily an investment strategy you want to incorporate in your portfolio? Or is this something that you think seems too complicated, too expensive, or something you're just not interested in? I really want to know. So make sure you follow me on LinkedIn at Walida Shree. So that is all I have for now. I want to thank you for coming on the show today, Joseph. If you're new to the podcast, be sure to subscribe. For those who are return listeners, thank you for returning. Be sure to share this episode with a friend. That is all I have. Until next time, I will talk to you later.